We got earnings from two big banks. BMO beat estimates in its latest quarter. Capital markets helped. The company also set aside less money than expected for bad loans. And Bank of Nova Scotia profit also topped estimates. According to that company's newish CEO, Scott Thompson, the diversified franchise helped out there. Let's get more on these bank numbers. We're joined by Tim Regan, Managing Director and Portfolio Manager at Kingwest Company. Great to see you, Tim.
Great to see you as well, Andrew.
Give us your thoughts on BMO. There has been disappointment over the past few quarters over its U.S. operations, but are you a buyer of the stock right now?
We aren't. We don't own BMO. We own other stocks, but BMO has done fairly well. They came in, their net interest margin is higher. You're looking at wealth management being great, capital markets being great. And so it wasn't really a surprise to us how well the banks are doing, especially after looking at how the U.S. banks did in their first quarter as well.
Right. So there's BMO up around 11% in the past year. What about Bank of Nova Scotia? Work in progress under the newish CEO, as they call him?
Definitely work in progress. I mean, they have that tremendous exposure to Latin America, but they did relatively well, too, beating expectations. Once again, it's a bank we don't own. You can't own them all. But the banking sector in general should do very well in Canada this earnings season, and you're seeing the first two come out. So the big question is what happens in the next few quarters if we do get tariffs? That's, I think, the question that everybody asks today.
That's really impossible to answer, yeah. The banks will, of course, catch a cold if the Canadian economy gets pneumonia.
Yeah, they definitely will. Some of the ones that are exposed to the U.S., like TD or BMO, should do relatively better, but we'll soon see what happens.
Yeah, that's interesting. Scotia has been cleaning up its portfolio, selling down some of the Latin American operations. I think it's John Aiken of Barclays today arguing that the stock is cheap. Are you attracted to it?
We look at it every once in a while, but of course you can't own all the bank stocks, and some are more attractive than others. But, you know, they did the deal where they bought about 15% of KeyCorp, which is a bank in the States.
Right.
And we'll see what that strategy is. Are they going to reinvest quite a bit in the States, take it from Latin America? We'll see as Scotia progresses. Right,
yeah. So, Aiken of Barclays, or of Jefferies, he used to be at Barclays, now at Jefferies, sorry, John, says the relatively low multiple on Scotia reflects the ongoing strategic review. So we don't know what this bank's going to look like a year from now, I guess you could argue.
I mean, you know, Trump backs away from all tariffs in North America and Latin America. It could be great, but we just don't know.
We do still have a fair number of mortgages coming up for renewal in Canada. We're going to actually hear this afternoon from Robert McLister, the longtime commentator on the mortgage business. So there is some risk there to the banks that some people won't be able to roll over their mortgage.
There is, but I mean, if you look at it now, I think a 5-year mortgage, the best rate you can get is close to 4%. I remember getting my first mortgage at almost 7%. That's how long ago it was. 4% is not bad, but some of the people who are rolling their mortgages on the 5-year basis are coming off of a 2% mortgage. If it's variable, you're doing that much better. So yes, is it going to take more of a bite out of the consumer's wallet? Absolutely. But 4% mortgages should be manageable.
What about TD, another work in progress? We're going to hear about their strategic plan later this year. Is there value there in TD stock?
We own it, and we think there's a lot of value in TD. It trades very cheaply. Once they had their problem in the U.S. resolved, they said they'd come out with a game plan with a new CEO, but already they've started to buy back stock, sell their Schwab stake. And so I think they're kind of on the path of renewal, we'll say.
Right. I'm just looking at TD's dividend yield, 5%. I mean, presumably they'll be inclined to increase that dividend with their strong balance sheet.
They will, but I think they want to get through and work on their strategic plan first. So don't forget, some of the money from Schwab is set aside for buying back shares. Some is reinvestment. So that's the real issue. Where are they going to reinvest?
So you said, I think you own TD.
We own TD,
but not BMO and Scotia.
But not BMO and Scotia. The other bank we own is Royal Bank.
Okay.
And we also have a stake in Equitable Bank, the challenger bank.
Oh, yeah. Let's have a quick look at EQB because that stock has done well. I haven't checked it lately, but they are just getting in the face of the big banks, potentially stealing market share, Equitable Bank.
Well, they're small enough that they kind of, skate in under the radar.
Right.
They're highly digitalized, so it's not expensive for them to get the mortgages to service them, and they're growing. And so we think as a smaller growth engine, Equitable is doing a fantastic job.
Equitable, I think we're having trouble with EQB, that stock chart, but it is up. Total return of 10% in the past year. Let me just check the yield on that stock, only about 2%.
Well, and their yield is lower than most banks because they're reinvesting their money into growth. And so what you're getting is a growth engine. And it's in areas of the market that some of the bigger banks won't get into as much. And with everything going on, they probably will still stay away from some of the areas that Equitable gets in.
Tim, always great hearing from you. Thank you very much.
Great to see you.
Tim Regan, Managing Director and Portfolio